More and more 401k plan providers are allowing employees to opt for the Roth provision, which has a lot of people wondering whether the traditional or the Roth 401k is the best option for their financial future. Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in today's video, we're discussing a common question we receive on our 401k videos, and that is, should I do a traditional or a Roth 401k, and which is best?
Well, that's a great question, Michelle. And it basically comes down to your personal preference.
Okay.
And so, do you want to take advantage of a tax break today? If so, traditional 401k. You want to enjoy tax-free withdrawals in the future? Roth 401k. Obviously, there's more to it than that, but that's really the key difference. So,
okay. Well, before we get into those key differences and the details, if you like the content of this video, hit that like button, help us grow this channel, and let us know that you like the content we're producing. Don't forget to subscribe and also comment if you have questions. All right. So, Brian, let's go get into it. What are the key differences?
Okay. Both traditional and Roth 401ks are popular.
Right.
Tax advantage retirement savings accounts that allow your savings to grow tax deferred, right?
Sure.
However, they differ where tax treatment, investment options, and employer contributions are concerned.
Okay.
Let's first talk about the traditional 401k. It allows you to save money on a pre-tax basis. Your contributions grow tax deferred, and it gives you a tax deduction immediately subject to that year's income limits, right? And the max contribution for 2023, Michelle, is $22,500, $30,000 though if you're over the age of 50.
Right.
Withdrawals are penalty free after 59 and a half, penalty of 10% if you take funds out before the age of 59 and a half. And at the age 72, your distributions are mandated as RMDs. And when you take out funds, you're taxed as current income in the year withdrawn.
Can you roll over money in a traditional 401k account into a Roth 401k?
Yes, you sure can, but you're going to have to pay taxes on the conversion of these funds for the year that you do this.
Taxes. We can't avoid it, can we?
No. So now let's go into the Roth 401k now. Contributions are made with after-tax dollars. They grow tax deferred just like the traditional. Same max contributions for 2023 of $22,500 or $30,000 if you're over the age of 50.
Okay.
Your withdrawals are penalty free after age 59 and a half and the account is 5 years old. And your earnings are tax free after age 59 and a half and the account is 5 years old. You still have to do the mandatory distributions at the age of 72 unless you roll them into a Roth IRA.
Okay. So what about employer matching? Does that work for the Roth the way it does the traditional 401k?
Yeah, that great question there, Michelle. That all depends on the plan. Each employer will dictate the rules of the plan of how much they can match and if they do it pre-tax, after tax, whatever it may be. So if you're unsure, make sure you reach out to your HR department on this question.
Okay. All right. So unlike the traditional, the Roth allows you to withdraw penalty free after the age of 59 and a half. And if you've held that Roth 401k for 5 years old, is that correct?
Right.
Okay. So that 5 years is critical.
Yes, it is.
So are withdrawals also allowed for certain extenuating circumstances such as death or permanent disability, as long as the 5-year rule, 5-year requirement has been satisfied like it is with the Roth IRA?
Yes, except for in the disability situation. Okay. IRS looks at disability. If it's total and permanent, you get penalty-free withdrawals. There's no need to wait for that 5-year period. So
okay, all right, good to know. So if I can contribute to the Roth 401k account, let's say I have a Roth 401k provision and the traditional 401k with my employer, how does one go about keeping track of the different accounts and how much has been contributed?
Your statement that you get, whether it's a monthly or quarterly basis, will show every contribution that you make, Michelle, whether it's pre-tax money or after-tax money into the Roth or to the traditional, and also what your employer contributes to each one of them accounts if they do. So open your statements.
Well, I was going to say, so basically the answer is you need to open your statements.
Yes, definitely. But it does show it. So you don't have to keep track of it yourself. So.
All right, great. So I have a clarifying question on contribution limits. Probably should have asked this first. So the max for 2023 is $22,500 if you're under 50. And this is for both the traditional and the Roth 401k. My question is, you can't just clarifying question. You can't contribute the max amount to both. This is about the combined maximum amount.
Yeah, it's combined amount, but you can split it any way you see fit as far as your total contributions for the year. So,
okay. So you really need to open your statements to make sure that, if you are pushing that contribution limit, you don't go over it because you put too much in the Roth. And right. I mean, you really have to pay
the whole account. Yeah. You'll have to send it back or pull it out by the end of the year so you don't get penalized. So,
got it. Yeah. That's the last thing we need.
Yeah.
Please don't do that. Read your statements. All right. So you mentioned that people can split the contribution any way they see fit. So do you recommend that people split their contributions maybe to get a tax break on half of them and then get tax-free earnings on the other half in retirement?
Yeah.
What's the best way to go about that?
This goes down to personal preference.
Okay.
If you need more of a tax break this year than you did the following year, you can change this up each year as long as your employer allows it. So,
okay. All right.
I recommend reach out for assistance. Ask someone for help each year to make sure you're putting the max amount in that makes sense for you and your personal situation.
All righty. Okay, we're going to put a link in the pinned comment below and also below this video on Is Your 401k Losing Money? It's one of our most popular 401k videos. Do check it out. There's been so much market volatility, as we all know lately. But that video is extremely helpful in like what you need to do if your 401k is losing money. Definitely. And if you like the content of this video, hit that like button, subscribe, leave us a comment. We always appreciate our comments and help us grow this channel by liking it. Brian, before we wrap up, is there anything else you want to add?
No, it's just your personal preference. Open your statement, know how much you're putting in, and understand what your goals are.
All right. Thank you, Brian, and thanks to everyone who watched.
Thanks, everyone.